Welcome back to the Futures Show. Now let's bring in Carly Garner, senior commodity strategist and broker at DeCarly Trading. Carly, thanks so much for joining the show.
Good morning. It's good to be here.
So we're talking crude oil, the performance in 2024, and looking ahead to 2025. Carly, if you take a look at the crude oil chart, it really started on a high note, but is ending much lower than where it began. Talk to us about the key drivers of oil in 2024.
No, it's been an interesting year. If you would have just looked at strictly headlines and not charts, you probably would have thought it would have been a pretty exciting year in oil. We've had a lot of really big potentially market-moving events that really haven't translated into market-moving prices. In fact, the volatility in crude oil is among the lowest we've seen on a year-over-year basis for quite some time. The CVOL, which is basically the VIX for commodities issued by the CME, is showing the crude oil VIX basically spent most of the year between 20 and 30, which is, again, relatively deflated. And we did have a spike in the CVOL, which is basically, if you're not familiar with volatility index, it is basically the implied volatility built into the option market. So the option traders build in additional premium into the options if they think there's potentially some event or some environment that's going to create volatility in the future. And so we've seen a couple spikes this year, but they were very short-lived and they didn't translate into spikes in the futures market. This is interesting to me because it shows that we just have a really lack of speculative fervor in the crude oil market. And I think eventually this is going to continue to weigh on prices. It's been a very quiet year. Crude oil doesn't stay quiet forever. We're in a tight range. I think the support area is about 66. Resistance is about 70-ish, 72. Once we pick a direction, we probably get a pretty sizable move. I think the most likely direction is going to be lower, though. I'm looking for the mid to low 50s in crude oil here in the next couple of months.
Wow, so that sizable move could bring us to as low as low 50s. What's the bull case then for oil if you're potentially seeing a move higher?
Well, see, I have a really hard time finding the bull story here, just simply because when I look at the peripheral markets and the environment, the U.S. dollar is trading around 108. I do happen to believe 108, 109 is probably going to be the top in the dollar, but I don't think the crude oil market has fully appreciated the fact that the dollar is so high. A $108 might not seem like that big of a headwind because we're coming off 113 from a few years ago, but in the big picture, 108 is very high based on historic standards. So the dollar's working against oil and other commodities and other U.S.-based corporations. So it works against economic growth. So we have that. Seasonality is bearish for the next couple of years. Couple of months. Sorry, it's a Monday morning. So we have a kind of a window of opportunity for the bears to take hold. And we've really been making lower highs since the March 2022 spike up to about 130 in oil. We've consistently made lower highs. And the rallies have been very sluggish. Just a couple of weeks ago, we got news out of OPEC that was actually quite supportive. And we only saw like a $3 or $4 rally in oil. So when I see the price action not following the headlines, it tells me that the market's trying to send us a signal that maybe the trend will extend itself on the downside. If you are an oil bull, I would simply say you're probably somebody that's looking for some sort of spike in geopolitical tension, something going on overseas. The new U.S. administration, obviously, their mantra is drill, baby, drill. So that's working against that scenario. But, we'll have to see how things play out. Things can change very, very quickly. That said, I think this is an environment, because of the low implied volatility, to be an option buyer, not a futures trader or an option seller. I know options aren't for everybody, but the reality is because the market's been so quiet and we could be setting up for such a big breakout one direction or the other, options are relatively cheap. If you're a bull, you could buy pretty cheap call options out of the money with a little bit of time. 2 or 3 months, preferably, in my opinion. You can do the same thing on the put side if you're a bear, or you could even do one of each, just in case, if you're neutral and you're not sure, but you want to have a foot in the door.
Okay, so ways to play what could be a sizable move in oil prices. I guess what I still just don't really understand is you talked about how there were potential market-moving events that should have lifted oil prices, and we didn't see that lift. And then you're expecting oil prices to move even lower, despite the fact that we had seen geopolitical turmoil sort of, ratchet up. So why is that? Is this all linked to demand out of China, or why aren't we seeing oil prices move higher?
Well, it's a good question. As somebody that's in the business of speculation, I'm a commodity broker. I can see that traders have moved on to other things. They're focused on other markets, other areas of opportunity. They've got moved away from the crude oil market. In the big picture, crude oil prices or any commodity prices based on supply and demand fundamentals. But in the short run, speculators can kind of influence temporary price spikes. There's just not the speculative nature that we've seen in the last couple of years in crude oil. Everybody's looking at other things, so that's probably part of it. The other part is, you can imagine that other parts of the world, in Europe and China, they're dealing with issues or worries of deflation, not inflation. They're worried about economic growth, not a little different situation than we are here in the U.S. And I think maybe it's just a matter of time before that bleeds into our side of the world. Again, a lot can happen in a year. We don't know what we don't know yet. But I do believe, I will say that if we do get the mid to low 50s, as I think is probably most likely based on charting and positioning, probably going to be a pretty good buy. So if you're a bull, maybe save a lot of some of your buying power over the next couple of months. See if we do get that fallout, and you might be able to get in at some pretty good prices.
Okay. All right. So interesting to note there. You talked about the new administration's mantra being drill, baby, drill. I guess, is there even a need to drill, baby, drill, given what we're seeing with oil? And also, President-elect Trump has vowed to cut energy prices in half in his first 18 months in office. How realistic is that? Because, 50 is lower, or low 50s, as you said, is lower, but it's not cut in half.
Right. No, I mean, anything is possible. And it is true. The last time Trump was in office, we did see oil trade between 30 and 60, not 60 and 80 like we're seeing now. So it could be definitely a different environment. There's a couple things that are different here, though. OPEC at this particular time is, they've dug in pretty hard on keeping supply stable enough to keep prices elevated, whereas the last time Trump was in the office, there was actually a bit of a conflict between OPEC and OPEC Plus, and they're having an internal price war flooding the market on their end, in addition to the U.S. flooding the market. So there's a lot of different things going on here, and I think OPEC probably gives the oil market a little more support this time around than they did last. So I'm not sure we see the 30s, but 50s is very doable.
Okay, so finally, you talked about buying options. You talked about the low 50s potentially being a good buying opportunity. What's the final takeaway for traders, for investors, heading into year end and thinking about 2025?
It's a long year. The next couple of weeks are going to be a little bit tricky. I always tell people during the holidays, this is not a time to swing for the fence. Maybe this is a time to mentally prepare for what you want to do next year. But I wouldn't take any big actions in the next couple of weeks based on anything I see or hear. There's a lot of head fakes. There's a lot of weird things that go on due to end of year position squaring and lack of liquidity. So just be careful the next couple of weeks. Save most of your buying power until we get into the new year. Liquidity comes back and things become a little more clear.
All right, Carly Garner, appreciate your advice, appreciate your insights. Senior commodity strategist and broker at Carly Trading. Thanks so much.